Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everybody, Happy New Year to you. Looking at SPY to wrap up 2016, and we're ending on a bearish note. We had our first bearish signal on Thursday with the break of the low of Fed Day, 224.04. We did still keep that middle Bollinger Band support, so there was some hope for the bulls, but as of right now, we are losing that support. Another leg to the downside on Friday, some high volume as it looks like things were being rebalanced to end the year. And we're looking at support now of 222.73, the low of Friday, and then previous resistance now support of 220.52. The uptrend is still very much intact if we maintain this higher low right here, 217.87. So just putting everything in perspective, we're about 1.5% from the all-time high, and we're closer to the all-time high than we are to that support. Without a doubt, we are seeing normal, healthy consolidation at this point. Look at what has happened since the election, and it's been one big bull move. This is the first time we've lost the middle Bollinger Band as support since that election. So we do note that looking down on some of these names, the financial sector, biotech sector is still weak. All these individual names are giving some nice downside gains the past couple of days, and we'll look to see if that's going to continue to start the new year with that target of 217.87. I shouldn't call it a target, but that's the key level for the bulls to hold. We have moving average supports catching up. They will come into play before that level. The weekly time frame shows the consolidation. We had an inside candlestick here, and the tightening range clearly breaking for the bears. And we're now just seeing normal healthy consolidation. We're rejecting from the upper Bollinger Band. Higher lows still maintained. And again, if we pull back and break 217.87, we will have to reassess the situation. But until that happens, it is normal healthy consolidation. We're just looking for short-term bearish action. Looking at SPY on the 5-minute time frame from Friday, it was very clear the bears were in control to start the day with a big red candlestick, and the second candlestick is where we gain confidence as bears because the high of that candlestick back-tested and rejected from the 200-period 5-minute moving average resistance. So the first candlestick loses all 5-minute support, second candlestick back-tests and rejects from that resistance, and then it's just lower highs and lower lows pretty much for the rest of the day. A little bit of bullish action at the end of the day, not significant. And looking at the hourly time frame, we have all hourly moving averages as resistance, potentially a bear flag on the hourly cooling off the RSI from overbought. But we'll have to be watching this 20 period as it rejected the price Thursday multiple times, and it was resistance pretty much all of Friday. So bears in control of the short term, not affecting the long-term trend at this point, and we will see if we continue to get this consolidation to start 2017. I appreciate you watching, and we will see you next week to start the year off right.